If you like what you see, if I can please request you to subscribe to my channel. So what is fiscal drag? Fiscal drag occurs when individuals or households experience an increase in their taxes due to inflation. But how does this actually work? What do you mean by fiscal drag? The government's tax rates and income thresholds remain constant. However, income increases in line with inflation. This pulls more people and businesses into higher tax bands, eroding the value of their allowances. So what are the effects of fiscal drag on individuals and businesses? For individuals, fiscal drag increases tax burdens and reduces disposable income. Individuals save less, and the erosion of purchasing power reduces the standard of living. For businesses, there is a reduction in cash flows since more cash needs to be kept for taxes. Besides this, firms may lose competitive advantage as workers are attracted to jurisdictions with lower taxes. Fiscal drag reduces the capital that companies have, which could have been allocated to other areas like expansion or research. But what about the government? The government has increased tax revenues, gets budgetary stability, and reduces its own deficits. However, in the longer term, this may discourage investment, reducing economic growth. People could get dissatisfied with the government when they are pushed into higher tax brackets. It could also unfairly affect middle-income earners who are dragged into the high-income tax bracket. So how should governments limit fiscal drag? Well, for one, income tax brackets could be indexed to inflation. Indexing ensures that tax thresholds and rates automatically adjust. Governments should periodically review and adjust tax brackets to account for inflation. Governments can also reduce tax rates or simply implement tax credits. One thing is for sure, it's good for governments to have a regular review of the tax system to maintain a fair and equitable system. While each country is different and each person's situation is different, to make sure that they're not affected by fiscal drag, it might be good to consider pension contributions, professional and deductible expenses, charitable giving, and tax-efficient investing. It's good to be aware of how fiscal policy can impact personal finances. So my question for the day is, what are private placements?